Hello, it's Adil bringing you a intermarket analysis perspective of the S&P 500 going into next week's trading, the 17th of March 2014. Okay, so basically we have the S&P 500 before us, and let's have a look at some of the fundamental currents that are running up behind this market at present before we discuss the technicals. Okay, so I've already given a review of the FTSE 100, so I have covered the majority of technical fundamentals there with regards to the backdrop. Okay, in Europe, obviously the backdrop in Europe is has been exacerbated, or the negative bias has been exacerbated given the tensions in Ukraine, given the fact that it's a regional problem, and it's more of a regional problem and more of a problem for the Europeans, given the fact that the gas reserves are dependent upon that. But whereas and obviously the more exposed to emerging markets, etc. Okay, whereas the Americans have been quite resilient, given the fact that obviously Europe has pulled back quite substantially, given the fact that the DAX was down almost 5% at one time. Okay, the US markets have been quite resilient. Okay, even with the argument of tapering. Okay, so basically the first current is tapering. Okay, tapering concerns obviously that has strengthened the dollar. Dollar gets strengthened, obviously that's negative for the stock markets, given the fact that the US exports are dependent upon the dollar itself. Obviously that's number one. Number two, given the fact that the easy money, or the Kool-Aid that's in the system, is being withdrawn, so the free money is no longer there. Obviously that can cause a problem itself, and hence the reason why emerging markets are finding problems, because that easy money is no longer available. Okay, so whenever you reduced the liquidity, then it's usually the most risk sensitive, or the countries are on the periphery, such as emerging markets, that will get hit most. Okay, given the fact that the funding costs will start to rise, etc., etc., and the yields, etc., bonds, etc., and basically the whole markets are affected. Okay, and demand for that area or that region is obviously affected first and foremost, because it's survival of the fittest, and given the fact that America is a superpower, obviously they will always drain the resources, and also the resources generally get drained towards the strongest as well. So given the fact that the America market is quite resilient, even though unemployment certainly doesn't back it either, given the fact that economic growth certainly doesn't support it either, yet the US markets have been quite resilient because of the excess liquidity. Okay, so given the fact that the whole Ukraine situation has unfolded, the S&P has only fallen 40 points. Okay, so what does that tell you? That tells you resilience. Okay, that tells you support is certainly there for the S&P 500 to continue higher. It basically signals bullish. It's a bullish indicator. Okay, if the S&P 500 have been down to say 100 points, etc., then we can certainly argue. You can clearly see here on the weekly chart, there's nobody that can argue that this is bearish. Okay, yes, we've had a bearish engulfing candle, but what exactly has that engulfing candle achieved? All it's achieved is that it's hit previous resistance equal support at around the 1840 level, and that's all it's proven. Okay, so it's irrelevant. It's irrelevant. Basically, you don't get, and this is where as a trader or as an individual, you can't get wound up, or you can't get engrossed within all the noise. I understand, yes, the Ukraine situation is potentially contagious, especially if Russia doesn't yield to the demands of China and America, and obviously certainly things can exacerbate and get worse. But at present, that's not the situation. Okay, there's no Cold War between America and Russia right now. Okay, until that, obviously it's innocent until proven guilty. So if that does occur, then obviously we can react accordingly, and this key trend line here will break, and will break below 1800, and then the next level will be 1700, and yes, then we can confirm and say yes, this is certainly bearish. But from my perspective right now, the US markets remain resilient, are bullish. Okay, and I would certainly be looking to buy on the dip. Okay, unless that trend line is broken, unless the 1840 level is broken, then it brings 1800 into play and 1750 into play, and then we'll take it from there. But for now, going into Monday's trading, certainly a bull. Okay, the weekly chart is just a minor pullback. This is normal, healthy digestion, looking for a consolidation here, and obviously brings in the new buyers, buy the dip mentality, and off you go to the upside. Okay, from a daily perspective, yes, it's a fake out to the extent where the market's made new highs, failed to rally, given the fact that European markets have dragged it down, and China and Japan have dragged it down, and forced it to reverse and move in the opposite direction. I totally understand that from that perspective, but again, that's why as traders you can't rely just on technicals. Okay, if you rely just on technicals, you won't have a very high success rate, from my perspective anyway. You must utilize fundamental analysis and obviously intermarket analysis to filter out the noise. Okay, So basically, if you filter out the noise and look at what the market's telling you, I've already given you my explanation of the FTSE and how I expect the FTSE 100 to go higher, given the fact that the European variables are now all into major support. Then that would obviously conclude or lead me to believe that the S&P 500 will certainly be going higher, and that will drag the FTSE higher itself because it's inherently bullish. Okay, so the daily chart, obviously we are coming into support here at 1835 as your first level of support. Previous resistance equals support around this region here at 1840. Obviously we've broken the previous resistance line, so which isn't generally healthy, but again, it's, from my perspective, it's just consolidating. It's knocked out a lot of the fake out, or those that expected a breakout here, knocks out a lot of those individuals, and obviously going for the stops below and then before it starts to rally again. Okay, that's basically what I'm looking at. So let's have a look at a 60-minute chart of the S&P 500. Okay, so there's certainly a case to be made here. Okay, so we've let's have a look first of all. I mean, start anew with regards to this. So you've got horizontal support here, you have horizontal support here, which obviously we're holding both. Okay, so, and then obviously you got the 200 MA. So 1835 major support. Okay, 1835 massive support for the S&P 500. So keep an eye out for that one. That'll certainly be a major support. Okay, so we're in a potential downward sloping wedge, contracting wedge. Okay, and basically this is why I'm expecting a potential move and a breakout higher. Okay, so watch out for that pattern here. That's exactly what I expect to unfold and play out. Okay, we've closed this gap over here, which is the 1846 gap, and we are now into support. Now, looking at the larger scheme of things, this is something that's prevalent on the daily chart as well. One cannot ignore this pattern. Okay, your left shoulder here, there's your head, we go down. Okay, we bounce from here, we create a right shoulder, and obviously down we go again. Okay, so one cannot ignore that pattern. That pattern certainly exists. Okay, you can see that on the daily chart, you can see that on the 60-minute chart as well. But we'll come to that when the roads meet, when the roads cross. Okay, well, we create that right shoulder, and we are holding as resistance. Then we'll certainly come on to that. Until then, let's just say it's a hypothetical pattern and something that we need to be obviously aware of. Okay, right. So basically we have our trend lines here. So again, you've got a lot of volume coming in towards the last hour, so that's obviously bullish signal. You've got a downward sloping contracting pattern again, looking for a potential breakout. First test, if we do breakout, is going to be this level here, 1852. Previous resistance equals support, 1854, and then obviously 1862. Now I certainly expect 1862 to be tagged. That's what I'm looking for next week. So 1862, given the fact that the way the US markets are set up. So 1862, which is 200 MA, 1865. So expect the upper channel resistance to be tagged. Okay, so watch out for 1860, 65. That's my target going into next week for the S&P 500. Okay, so let's see if that's supported by alternative US markets. Okay, so you generally speaking, the leader, or let me say leader, but it certainly helps the FTSE and certainly supports the S&P. So S&P 500 is a small cap stocks, which is a Russell 2000. So Russell 2000 is now into gap fill support. Given the fact it's a gap fill support on potential higher highs and higher lows, it's retesting the previous breakout, consolidating, bang, off we go to the races. So that's certainly bullish for the S&P 500, given the fact that we're into gap fill support. So that's one argument there, that the S&P 500 will certainly continue its move higher and hit 1862 next week. Okay, Dow Jones, again, you're into some horizontal support here. You did fail to hold this level here, which is obviously previous resistance equals support, so we are below that. So you do have this potential support zone here. If that fails, and obviously then you've got this support zone here, which is previous resistance equals support. So we are into a potential powerful support zone. Now again, on this chart too as well, is that you have a left shoulder, you've got your head. Okay, we're into the neckline, we're looking for a bounce, and then obviously down we go. So again, long-term nature, given the fact that the American market is out of sync with the European markets, and it certainly remains bullish, then it certainly could later on down the line, I'm stating here, not now, maybe midweek or towards the end of the week, or alternatively, we just go out and we take out the high, and we just continue to make new highs, higher lows, and potentially, given the fact that the emerging market crisis is certainly exacerbated, given the fact that the Russian tensions have exacerbated, Miss Yellen may well decide to taper the taper. Okay, so that's certainly an argument, okay, from a fundamental perspective. So if she tapers the taper and puts a pause on the tapering, or reduces it to say 5 billion as opposed to 10 billion, then obviously that's going to get the QE junkies excited and literally could create a short squeeze, and the markets make new highs. Okay, so again, we as a trader, we have to be like a chess player. You have to discount every potential move that could ever occur on the chessboard. Okay, and if you account for every potential move and you're ready for that particular move, then you just trade accordingly. Okay, you're like a surfer. A day trader is like a surfer. Whichever way the wave takes him, he goes. It's irrelevant. Okay, you just change your bias accordingly. Okay, so don't be stubborn with your position. Just be flexible. Okay, the quicker you become flexible, the better you'll become. Okay, and this is a very famous quote by Marty Schwartz. Whilst we're on the topic, I became a winning trader when I was able to say, to hell with my ego when I'm wrong. Making money is more important. Okay, so basically there's a lot of wisdom in that. Okay, and the wisdom literally states, be flexible, be willing to change your bias, don't be stubborn. Obviously put your opinions to one side, and allow the market to dictate its opinion to you. Okay, so that's basically what we're doing right here. And again, this is all weekend analysis. This could change Monday, this could change Tuesday. I could have totally the opposite bias come Tuesday. I mean, this neckline here potentially could just be breached on Monday, given the fact that China's down overnight. Copper could make a new low, and then the next target will be a 200 MA. So then I'll be looking at 15,600 on the downside of the Dow, and obviously everything's bearish again. So again, be flexible. Okay, we always plan our trade our plan, and obviously if any of those gets negated or any of those takes a different course, then we adjust our course accordingly. Okay, so very important. Okay, so as a trader, so yes, if that's basically my thesis, given the fact that we have intermarket analysis, and it's very important for us to look at that from that perspective. Again, the Nasdaq's into its 38% fib retracement support. That's certainly an argument, given the fact that the semiconductors are into gap fill support. So again, that's another powerful argument. So always bear them two in mind. And overall, given the fact that the Dow Transportation Index still remains bullish, we're still at the highs, we're consolidating at the highs, we haven't pulled back quite substantially, given the fact that oil prices have fallen, and obviously that's helping the Dow Transportation stocks, and obviously that's helping the economy in general anyway, given the fact that the oil price fell from 105 to 98. Okay, that generally is stimulative. Okay, it's stimulative, it's like a stimulant as sorts, given the fact that Mr. Obama released the oil reserves, and that certainly reduces the concerns of any particular inflation down the road, okay, or also costs of production, which is obviously again like a stimulant, and it helps the economy. So that should certainly help the US markets, and especially with regards to employment as well. So if you add all that into the equation, it's certainly boding well for the S&P 500 going into next week's trading. So like I said, watch out for this potential small wedge to break out northwards. Once we break out, watch out for the first resistance at 1852. 1855, and then obviously ultimately 200 MA 1860. So that's basically my projection and forecast going into Monday's trading. Okay, folks, so I think I'll call it a day there on the S&P. Hopefully that's give you an insight in the US markets, which again, like I said, folks, is intermarket analysis. There's 3 time zones: European, US, and Asia, and it's like a relay race. They pass the baton. The baton is passed from one time zone to the other, and that baton has sentiment within it, has momentum within it, okay, and has a bias within it. So learn to read what the baton is telling you. Hopefully it'll improve your trading as well. Okay, folks, so risk on, risk off, wax on, wax off. Goodbye.